everybody to our podcast, Micro Moment and Compound Stock Earnings. And we're going to have a full house today. We got Keith Bill in the second, and Randy's here, and Mike is here, and Tim's here, and I'm here. And we just had a great day in Micro Moment today. In fact, we've had a good week, considering the week is so crazy. The market was so crazy. They came out with a huge bad job report, over 3,200,000 people or something like that, the largest it's ever been. And yet the market ended up going up. We were up today 11.68%, and we're up for Monday through today 62.39. So we have a good chance here of hitting. We've averaged over the last 46 weeks as of last Friday. We've averaged 4,800% plus, and that's about 105.50 a week. So we might hit that. If we have a decent day tomorrow, we could hit that. Anyhow, we've got a full crew here today. Hey, there's Keith. And Keith, I wanted you on here. You know, we don't talk to you every day and see how you're living through the quarantine up there.
Yeah, we're doing all right up here, sort of hunkering down and keeping safe up here. And,
is it cold?
It's cooler. I know, 40s, low 50s right now.
Yeah. Okay. I wanted you on and kind of bring everybody up to date, because I know you've been experimenting with the Trade the Moment, because that was not your original courses that you taught. And so I thought we'd give us an update. We can do that in a few minutes.
Yep.
Go to our website, micromomenttrading.com, www.micromomenttrading.com, and sign up for the free Cal report. It's been published for over 20 years. It comes out tomorrow, every Friday. It's dated on a Saturday. It comes out every Friday. And in that, you're going to find Randy and all the people that contact him and everybody here. So you're going to see how they're doing. They report everything, and all the questions are answered. It's quite long, so you don't have to read the whole thing. But it's a big report, and it tells you every single thing. Also, our website, the same website, you can find out. We combined the Compound Stock Earnings website and the Micro Moment Trading site. So you're going to have all the information about compound stock earnings, all the seminars that we offer, and what things cost. And we can sign up for Randy's stuff and Micro Moment Trading, which Micah and Tim do. And so everything's on this site, www.micromomenttrading.com. And so let's start off with Randy, because you weren't here last week. Last week, I don't think, Randy. So you said you were going to the doctor. I thought,
yeah.
I'm glad you survived.
Trying to make sure I'm not getting sick.
Yeah,
we're kind of self-quarantining ourselves in our house, just that the kids don't want to bring the grandkids over, just in case they don't want to get us sick. So
yeah,
we're just kind of hanging in here, doing little projects around the house, and of course trading. And that's one of the nice things about doing all this stuff is we already work from home.
Yeah.
We already trade from home, and as long as the market stays open and the internet stays on, then we can keep doing what we do. So that's a good thing. And feel bad for all those like up in New York and things where it's really going rampant, and it's popping up everywhere else. Everybody's fleeing New York and going to the other places, and then they're taking it with them. So
and I know Florida is required people to fly down from New York to Florida. Florida is required when they get off the airplane for them to self what do you call it, self
quarantine.
Yeah,
but not everybody's following the rules though.
Yeah,
so that's a bad thing. But anyway, Evan, actually, good last week. As you know, I teach the Advanced Charting Platinum service, and that's where we learn to use the proprietary advanced chart to identify the beginning of cycles, so that we can buy an option and then sell it as the cycle continues. And in the last couple of weeks, the cycles have been changing from up to down, so we've been just kind of hanging in there. Kind of amazing that the bill gets signed last night in the Senate. It hasn't gone to the House yet. They may vote on it tomorrow. We had huge jobless claims, 3.4 million this morning, and the Dow's up almost 1,000, and the S&P's up almost 100.
Yeah, it's just incredible.
Yeah. So is this going to be the third day in a row of a green market? Are we going to get back into a rising cycle? That's just unbelievable. And you have to watch out. I think you got to be careful about that, because it could just be a little bounce off the lows, and then if we get bad news again, unless the market keeps ignoring it, probably take another downturn. So we're being real cautious on the covered calls as well. Although last week, and I got my list up here, let me pull it up. Last week we closed out of, I think, 7 or 8 positions on the covered call. Whoop, there we go. There we go. We closed out of TLT for 11.7% return. Teledoc, which is a kind of a telecommunications doctor visit, close that out at 6.3% return. And this is, when I say close out, that means all the capital is returned that was invested plus these returns. Zoom, which is a competitor to the GoToMeeting that we're on, 17.6% return. Moderna, that's working on a coronavirus drug, 11.1% return. The VXX, which is the ETF for the volatility, and we know the volatility's just been going up and up and up. Actually entered 3 different positions on that, 13.6%, 13.6%, and 12.9%. And so those were closed out, and then additional positions had to be rolled into this week to be managed. And Joe always talks about that's the kind of one of the big benefits of doing covered calls is there's management. So we have multiple different techniques and processes that if the market doesn't go in the up, sideways, or slightly down, if it goes down more than that, then we just keep managing those positions, generating income for the week, and waiting until it comes back to the price that we have our capital in at. And so the 5 positions that got managed forward into this week already, it looks like 3 of them are pretty solid. That'll be closed out tomorrow for good returns, and the other 2 are right on the verge. So they may need to be managed into the next week for additional income. But it's all about selection, looking at charts, making sure we're looking at where the momentum is, and selecting the appropriate companies. And that's what we do during the covered call platinum service and the weekly coaching webinars that we conduct. And then those are recorded, and you can watch them later on as well. So not necessarily the funnest of times, but we're going to get through it. We're going to keep managing and keep generating income.
Yeah, that's the key here for people who don't understand what he's doing. If you just like stocks, you like to own stocks, then what he does, he buys a stock or a option called a LEAP. It's just a long-term option for cents on the dollar, and he rents that, and he gets incredible returns when he's doing LEAPs. So he's getting the benefit of leverage without having to borrow margin, which is deadly. And so it works out good. Hold on a second.
Well, just one thing. Don't trade on margin. Whatever you do, don't trade margin.
That's right.
That's where all these hedge funds are going under, because they're so leveraged and they've got all their margin calls coming in, and they're going out of business. Because no matter what you do, don't trade on margin.
Well, I think Tim can add a little bit of this. I think Tim, he just said this for the first time last week or sometime during the course of this week, has a bunch of family stocks, been around in family for a long time. And you sort of started trading that you hadn't, before you kind of knew everybody here, you really didn't run them each month, right? Can't hear you. Can't hear you.
Sorry, let's try that. Actually, thanks to Randy, we've been writing some calls on our outside of the fund investments. that have worked out. And it just amazed me, Randy. I wish I'd known this technique 30 years ago. I mean, it's just rent the dang thing. You know, I love it. You get paid for renting out what you own. What could be better? I mean, the risk is so low on these if you manage these positions correctly. So thanks to you, we've been able to even in this crappy market, pull in some additional income off of writing calls. So it's awesome. If you're listening and you haven't checked out Randy's classes or what he does, please do. It's a great technique for today's market.
I think one of the best of his techniques is people that very conservative. They've got these stocks, they've had them a long time. They want to keep them. Good stocks, and they don't mind them going up and down because they're not going to get rid of them. And they're living off the dividend because they want the dividend. Well, Randy has a technique that is foolproof to probably double, triple, quadruple whatever you're getting in dividends, and that's just simply you take your stock and you sell them out of the money near month call. That means on Friday, if it's a Friday expiration or it's a third Friday expiration, it's going to expire. You're going to keep the premium. You still got your stock. You just rent it again. Mm-hmm. And you always make sure it's an out of the money, because that way if you get called out, then you get a profit in the stock, and so now you got a profit in the stock, and you got a profit resulting from your premium you received when you rented it. You just go back and buy the stock for less than you got, and it's just an incredible technique.
And, and Joe, they're talking about that no one's going to pay their rent this coming month, and so the landlords aren't going to get their rent. But the covered call technique, and you can rent your stocks out, and the market's going to pay you the rent, so you're not going to miss those rent payments.
Mm-hmm.
And past that, all his other techniques doesn't make any difference if the market's up or down. He's going to follow the rules. He has lots of rules versus MMM, micro moment trading. If you buy stock or an option for the leap, access the stock, and it goes down, you've made your initial money, and then he has various techniques. You continue to make money based on what you sold it for originally, as if it hadn't dropped in value at all. Like if you get 5% or 10%, whatever it was, you can still get that. And you can go on forever doing that, and it goes back up. He's got techniques where you don't have to get out of the stock, and you can just keep producing that monthly income. Just a fantastic technique. Here's Brian. Is there a rule of thumb acceptable trading the spread when is the spread too much? Who would like to answer that?
Is that for Randy or is that for MMT?
Oh, no, I said whichever one of y'all want to take it.
Okay.
Oh, I think he's talking probably except for spread.
I don't know if it's talking about like a credit spread or
probably so, yeah.
A debit spread or what. I mean, there's all kinds of different spreads, and so I'm not quite sure
about that, right, Brian?
But we can answer this. Do you need a margin account to do covered call trades? No.
Absolutely not.
Because what a covered call is, for those that don't know, a covered call is you buy stock and you sell a call against it. And so it's covered because you have the stock. So don't buy the stock on margin. As long as you own the stock, when you sell a call against it, there's no other risk. The risk is you're going to sell the stock for the price that you sold, the strike that you sold the call at. And if you don't want to sell the stock, then we teach the technique that you don't have to sell the stock. And it's either because it's way out of the money call, or we have the techniques to keep from having to sell that stock. But there's no risk. The only risk is you're going to sell the stock at the strike that you sold the call at. There's no margin involved. There's no extra money that has to be set aside. You already own the stock. So it's probably the lowest risk type of a trade in the market that you can have.
If it's properly structured, there's not a risk there, because even if you pay $50 for the stock, you sell a call for 40 and you get called out. That's because you got a huge premium. You got a huge premium, and now you've got your hope. So there's no risk. But the word of margin in relation to the stock is really interesting. I mentioned this right on when we started today. If he has looked at a $50 stock, he doesn't have to pay $50 for the stock. He can just simply buy the leap, which is a long option, maybe 2 or 3 years out, for instead of $50 for maybe $4. And then he sells the regular call against that. So he's making a huge leveraged profit without the use of margin whatsoever. And that way it can't go wrong. And it's so far out there, it's not going to expire prematurely. The option's not. Otherwise, if you're using margin, you're in death grip there if the market drops on you. And that's like Randy said at the start. That's what's happened to a lot of mutual funds, and they have a real tough time keeping up. Brian says it is related to micro moment trading, so these guys can answer that in just a second. But just one more thing, and I've almost forgotten the one more thing I was going to talk about related to that.
It's called getting old, Joe.
I know. Well, we came in.
Joe, I know the feeling.
Because somebody asked me this the other day in an email. You can do any of these techniques, Randy's, Micah's, and Tim's, whatever, in 401ks, IRAs, all that kind of stuff. Because somebody asked me that the other day. And now Brian says, okay, 3 or 4 cent spread or less for MM trading. So, you want to take that, Tim?
Yeah, absolutely. Normally Q on normal days, it's running a 2 to 3 cent spread. That's a sweet spot for us. I was trading at 3 to 4 cent spreads. Even if it's showing a 7 to 10 cent spread, I'm making an offer between the two and managed to get filled most of the time on those today. In TradeStation, we can look at our matrix and we can see what's out there, what's being filled, so we have an idea of what's available. So we can adjust our size to that. But you don't want to get too far down, really. If you do an offer that's 2 cents above the bid, you don't have so far to go to get profitable. If you're doing something at 10 cents, you've got 10 cents you've got to make up, right? And we're not, until the last couple of days, we haven't seen moves that have covered the spread. So, keep it at 2 to 3 cents.
It's funny when he's talking about cents. And I use this example all the time. You finish up, go to the golf court, or you go to the golf club, have lunch, and you play some golf. Guys say, hey, and they know you're an investor. Say, hey, how you do? You say, well, I made 3 cents today. I made 5 cents today. That's a huge return, because typically these like QQQ, a lot of times average around, day in, day out around $1. So you get a nickel on that. That's 5%. But you're doing it in the case of Micah and Tim. You're doing it in 15 seconds, 20 seconds, and you're through for the day. Their session only lasts an hour in each day, Monday through Friday. And, like today, they did 7 trades for the 11.68%. And yesterday was 10 trades for 33.52%. That's a hell of a lot of money. And I give this example all the time. Take $2,000 instead of sending your kid to a worthless school. Give them $2,000, but put it into a brokerage account. Let them trade virtual trading first. Take our, buy the seminar. And if he makes 6% a week, not a day, and and just following their stuff, the trades are doing. In 2 years, 24 months, he's going to have right at $600,000 or so, 6% a week. And the kids are real smart on computers and stuff, and they can pull that off. Particularly, they're smarter than most more mature traders because they don't know anything. And so, and they're in education mode anyhow. So if they just listen and do what we say and follow the rules, they're going to be successful. So, James, when you post each trade in the micro moment trading news, can you post the buy to open ask price and the time of day along with the percentage? No, that's too much work. I'm not going to do that. You just have to take the similar, listen to it, and you're going to have it. Wouldn't do you any good. It's old information. And where you can get that though is go to YouTube. We record these sessions, every single one of them, and you can only have so many sessions on YouTube. But Sue Ann recorded yesterday's and recorded today's, and they'll be posted, and old will be taken off. And you can actually see the actual trades. It's not going to do you any good because it's a day old, but you can see the information that you're talking about or that you want to see. But to do all that stuff, you have to understand. I can only work, 15, 20 minutes a day, so I don't have time to do all this stuff. So,
and that's a good day.
But just go to the go to YouTube and you can see the exact stuff, and you can actually see them formulating the trade, why they're doing the trade, what trade it is, and their logic and reason. And you're sitting there looking at the same charts they're looking at. You're just seeing the exact same thing that people that are going to the sessions on a daily basis.
Yeah, and another thing is that information, all the information is only valuable at that moment that we do it. Out of context, I'm not sure it has a lot of value. You've got to see it as the trade is going off. You got to have it with the chart so you see the context in which we're trading. For Joe to list all that information, I'm just not sure it makes any sense out of context.
Yeah. Okay. Micah, what's going on up there in the 4 North? Oh, Micah's not talking today, I guess. We're looking at it. Hey, Micah, get your ears on.
Micah, we can't hear you right now, bud.
I think he's talking. Yeah. There you go.
There you go. Okay, cool.
Yeah, it's real low. It's real low. You need to turn it up. We didn't hear anything you said until just then. Okay, is it better?
Okay,
yeah.
There we go. Yeah, just one more thing on that is also our timestamps are sometimes 8 to 15 seconds apart. They're within the same candle. So you can't also get that granular on, looking back on historical information. I had a trade today from 7:30 to 40 and 40 seconds to 7:33 and 14 seconds. So 34 seconds, and we do things very differently than most people. So but yeah, no, up here it's going good. Everything's obviously pretty darn closed down. It's like a ghost town in the city, especially. And we're just kind of waiting it out. Like Joe said, I was talking to him earlier. It's funny watching all the people I know over here trying to get used to working from home or being home extra. And I've been doing this for a while now, so I've already had to go through that transition. But it is a little bit funny to watch that process, because it is a big shift for people, and I want to respect that. But we understand better than anyone what that's like to be working from home. So
I'm always amazed how technology is advancing so much. Like a while ago when you started talking, and your lips were moving, you talking, but we couldn't hear you. Which is fantastic. What technology has done. We saw, like, it was coming across the screen words like you do. What do you call it on TV? On TV.
The
subtitles.
Yeah, we might try that now on those seminars we're doing on the session.
Yep.
It's
true.
So, but no, that's right. And he's way up there in the. You have to admire him because he's what. Well, I'm in Puerto Rico. I'm right now this time of year, Eastern time, and you're 3 hours behind Eastern.
Yes.
Yep.
So it's really early in the morning. You're through. You're through by 7 o'clock in the morning.
Yeah. Pretty much.
The rest of the day, yeah. So it's amazing. So,
yep.
Okay, Keith. Now, tell us your experiences here. You're trying to reorganize your life and do macro-moment trading.
Yeah, with respect to working from home, I joke with my wife and I said, well, I'm going to work. Have you heard the traffic report yet between my office and the kitchen or something?
Yeah.
And I certainly don't miss that at all. So anyway.
Yeah, let me give a little knowledge, people, a little story about you. Keith's been in 13, 14 years, and was primarily doing credit spreads, and that market, kind of waned and became less attractive. So he's switching over and doing the macro moments, and that's why we like having him on here. And we have seminars and stuff. We usually invite him because he's got some great trading stories. And his very first seminar he attended, he spoke for about an hour or longer, and he had done before he did that seminar. He was going to be speaking, and so he wanted to have 1,000% return on a regular brokerage account. This was years ago, and he managed to get the last few weeks. It kind of went bad on him. He managed like 950% actual return on regular stock trades, and he brought the and we still have him. He brought the brokerage statements Nobody would believe that. But he's quite talented, and I'm sure he's just going to be burning up these macro moments. The other thing is our clients, when you attend these sessions that Micah and Tim do, people are constantly typing in, comments and asking questions and how they're doing. And the clients with this terrible market are just doing fantastic. I mean, we see one after another. They just, just like that, they're making 10 cents and 15 cents and 8 cents and 3 cents and blah, 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 blah. Just all over the place. And it always is really encouraging. Now, tomorrow is Friday. We have Happy Friday or Friendly Friday or whatever it is. And we open phone lines so people can talk on the phone and everybody can talk to each other. So, of course, I get it. But anyhow, got some more questions?
Well, he's loading those up. We also have a good, I put up a really cool video, another snapshot episode on our Facebook. It shows Tim getting in and out of 4 trades in the period of like 5 or 6 minutes. It's really, really a cool video because he gets in and out of the first 2 for like flat or 1 cent loss, but it's all in the same progression.
Mm-hmm.
And it's just a good demonstration of within the same leg how we can make the most of that leg while still mitigating our risk, still sticking to the rules of if it goes down you cut it right away, everything like that. So go check that out on our Facebook.
Do we have it on YouTube? Do we have it on
I know
YouTube?
it's on Facebook.
Oh, it's on Facebook. Okay.
I hope I wasn't cussing during that period.
No, you're doing good.
Normally Tim does a couple of trades during this podcast, and I'm looking at his eyes, and he's going back and forth. Have you done a trade?
I have. I've done 2 trades.
Okay, you can send them to me when you get a chance. And I'll put them in the deal tomorrow. It's already gone out today. I'll put them there tomorrow about them called podcast trades.
I'm also looking at Apple has finally come alive.
Yeah.
Yeah, I did one trade on Apple. I was going to send to you, Joe. It was actually a loss. We're still having. I mean, TradeStation's a great platform, but they break down in some really stupid ways.
Really?
Yeah. I hopped in and instantly pulled back to my stop.
Yep.
And so I was just going to let that fill. It was already there, and then it just like 1 cent by 1 cent got below my stop, and nothing happened.
Yes.
And then it accelerated again. The stop just didn't do anything. It just sits there.
Yeah.
Yep.
Life.
If we keep having those problems, we can always change. I mean, we always change.
If they're it's a great platform, but they break down on these little levels.
Yeah.
That just, like the other day when my chart and like I crashed 2 times in one day, the platform totally froze up and then just disjointed option chain to chart, like just some really basic things. But if they fix it, it would be the perfect platform. It really would be. But man, so yeah, that took 11 cents on that.
Yeah.
As you know, I have had that same issue with TradeStation.
I've had to call in for Tim to get a trade closed because it just stopped working.
Yeah.
Well, we can always try to change. It's just much trouble, So
it's so much paperwork and everything, especially with having a corporate account. It's fine. I mean, we're still very up in the long term, so every once in a while we take a hit, but I think we're surviving it decently.
For those attending unaware, I'm sure everybody is by now, but and I've been predicting for a long time. But these trading platforms don't charge a commission, a trade commission. They got some of them will charge in it, but the math thing, and they negotiate it. But when they make that, they're not burdening themselves with a bunch of commissions. So some people say, well, you trade that much, you're paying lots of commissions. Well, what the hell difference does it make? You're paying lots of commissions if you're making those kind of returns. I mean, the commission is just be a cost for your return.
Yeah,
but they're not. So.
Yeah, and I mean, end of the day, we look at our P&L, and if it's greater than what we started with, then
that's right.
Who cares?
Never dread a day. We never dread it. You see the news of what came out later before the market. You say, oh, the market went down. Oh, no, it's going to be terrible. No, we don't. That's fine. We love down markets. We love up markets.
Mm-hmm.
Markets up and down.
Mm-hmm.
The thing that's so important about that, I want to highlight in this type of market.
Yeah.
Because if you're trying to predict things, right, like everybody is, then you would look at, over 3 million people getting out of work as a bad thing, as you would. right? And Apple's on an absolute tirade right now. Just
Good
Yeah.
Lord. Oh my gosh. Look at that.
vertical.
Yeah.
And I looked at the news, and it literally says, as stocks rise after historic jobless claims. So
Yeah.
people are going on these news sites,
Yeah.
right? Who knows how accurate they are in the first place, and trying to make bets off of positive or negative news, sentiment, things like that. In this type of market, like, we're up over 1,000 points on the Dow because we have 3 million people more unemployed overnight. And, you can't, not only can you not predict, you couldn't predict it if the news was accurate and actually did the right thing. But on top of that, it's going to do what it wants anyways. You cannot think like that. You have to be in this binary mindset where it can go up or down and your strategy still works, and you're not trying to predict these things because you can't.
I just haven't saw it. Are there any publicly traded pawn shops?
I'm not sure.
I think that'd be fantastic.
PK, Pawn Kings, let's see.
No, that's right. And what was the market a couple of days ago? It was up 1,100 to 1,200 points. It's supposed to ever been up. Was that amount. And then the next day it was back down. It was just all over the place. And we want that activity. We relish that activity because that's what we're trading, is the activity. Because you're in court like today. I don't mean how many times we're going to do cost down. And then 5 minutes later, you say, well, nothing going on there. We're back to puts are moving now. And then you go back to cost. So you're just switching with the times and making good trades. But what Mike was talking about getting out of a trade, you want to get out of them as quick as it turns red. Sometimes it's quicker than others, but a lot of times, normally they had a little higher loss today, but normally they're less than a cent. I think Tim had one today that was a fraction. No, that was a small profit. It was 0.007 or something like that. But the loss was only 0.007.
Yeah.
So I had a flat as well, 128 to 128, and then so we had 2 trades that were 2 technically losing trades that we lost combined 0.7% on, and then one that my platform just didn't do that.
That's the main technique you learn. If you can master that, get down something and don't get psyched out about it. Because here they're making all these profits, and a trade comes around, it's down a half a cent or something, and to sit there and say, well, it's a good thing to do. That's a terrible thing to do.
Every time. Absolutely. Like I was saying, now to our guidelines, our rules. And we do fine. Cautious right now because our pullback and deep to see a 5 to 10 cent pullback. So, we just have to be in place.
Yeah.
We just have established that we know it's proper almost a year now. And
we've been doing it as a year, but we've been technique, I guess, maybe. And it's kind of, grown 46 weeks as of. Okay, we'll call it quits. Nobody, the dim lights and stuff in your house or something like that.
Yeah.
And then just the volume of trading and stuff. So
I think every server everywhere, we was ready for it. They don't have the bandwidth. They don't have the server space. They don't have that hard.
Pay a lot of money to customers because they were down for a couple of days. And their big discount broke like 12 million clients or something like that.